The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Boulos. These are your headlines. Israel ramps up overnight airstrikes on Iran after Prime Minister Benjamin Netanyahu insists Iran's uranium enrichment capability has been eliminated, but opens up the possibility of a ground invasion.
It is often said that you can't do revolutions from the air. That is true. There are many possibilities for this ground component.
Europe's central banks slam the brakes on any further rate cuts, with the ECB and the Bank of England warning that the war in the Middle East will see energy costs rise and renew inflationary pressures.
The war in the Middle East has made the outlook significantly more uncertain, creating upside risks for inflation.
Sadly, the outbreak of the conflict in the Middle East and the impact that's had on energy prices, and of course we're now facing a very volatile situation.
European leaders call for warring parties in the Middle East to stop attacks on key energy infrastructure, even as the summit is overshadowed by Hungary's veto on the bloc's €90 billion loan for Ukraine.
The risks of a further escalation in the region are significant, and the global effects are serious, including the United States of America. That is why we all want the hostilities to end as quickly as possible. What we finally need now is the start of a new peace order for the Middle East.
Israel has carried out a fresh wave of strikes against Iran overnight as the conflict in the region looks set to enter its fourth week with little signs of abating. Meanwhile, Israeli Prime Minister Benjamin Netanyahu says the war will end, quote, a lot faster than people think, as he outlined the damage done to Iran's military capabilities.
Already today, after 20 days, I can announce to you Iran today has no possibility to enrich uranium and no possibility to produce ballistic missiles.
Both Netanyahu and US President Donald Trump weighed in on the attack on Iran's South Pars gas field, suggesting there will not be similar attacks ahead.
Yeah, I did. I told him don't do that, and he won't do that. We didn't discuss. We're independent, we get along great. It's coordinated, but on occasion he'll do something, and if I don't like it, and so we're not doing that anymore.
Israel acted alone against the Slawia gas compound. Fact number two, President Trump asked us to hold off on future attacks, and we're holding out.
So some red lines starting to emerge around what infrastructure can actually be attacked at this point. Now, this is the reaction we've seen in the oil price, WTI versus Brent, and we've seen that premium emerge for Brent. You can see marching high up about 5% for the trading week as we wrapped up the trade yesterday. Now, officials from Saudi Arabia have projected that oil prices could rise past $180 a barrel if disruption continues through April, according to the Wall Street Journal. Both WTI and Brent are up over 40% since the start of the conflict. And of course, central banks yesterday across the board were just recalibrating around multiple scenarios. And let's get out to Dan. He joins us with the latest from the region. Dan, that was what was so striking in the central bank commentary yesterday, was the scenario of a very short conflict, a resolution soon, versus a much more drawn out scenario with an elevated oil price. So just walk us through the developments and what you're seeing now.
Karen, good morning to you. I like what you said about those red lines around energy infrastructure. Unfortunately, it's too little, too late for the Qataris, who woke up this morning with the light of day revealing the full extent of the damage at Qatar's Ras Laffan energy facility, which confirmed that 17% of Qatar's export capacity has now been wiped out as a result of this week's Iranian strike. The CEO Saad Al-Kaabi was speaking to Reuters, warning that now the repairs won't take months, they're going to take 3 to 5 years. And he's also saying that force majeure has already been triggered on long-term contracts as well. The CEO calling those attacks, and I quote here, unjustified and senseless, also saying that this really was an attack on global energy security. So that's the fallout inside Qatar, and of course the fallout for the energy markets only really now just beginning. This could have a direct implication for Europe, which relies on Qatar for about 10% of its total LNG imports. As you've heard through the course of the last 12 hours in the central bank commentary that markets have been focusing in on, particularly from the ECB and the BoE, it appears now that policymakers in Europe could be preparing for a potential energy price shock here. Maybe not the same as what we saw in 2022 after Russia's invasion of Ukraine, given just how far Europe has come to diversify its energy sources and the amount of alternatives that are available. But nevertheless, a gas price shock either way. And then on the oil front as well, there's been a significant development too. Overnight, the US Treasury Secretary Scott Bessent suggesting that the White House may actually look to ease sanctions on, get this, Iranian oil in order to alleviate the price pressures. And this is, of course, a significant development as well. The goal here for the White House would be to attempt to add more barrels to supply, try and bring down what has been triple-digit oil without providing a financial windfall to the Iranians. Exactly how it does that remains to be seen, but it's just one idea being floated in order to ease some of the price burden that is now clearly filtering through to the global economy as a result of what has unfolded here over the last 3 weeks.
OK, Dan, for the moment, thank you very much indeed. And what Dan was talking about there, the oil price and the energy price rise, is very much on the minds of central bankers. And hold was the word of the day on Thursday as central banks across Europe kept rates steady in the face of uncertainty amid the Iran war. The ECB, the Bank of England, the S&P and the Riksbank all delivered their latest monetary decisions, with the Bank of Japan also keeping rates steady, warning the conflict could push up inflation. Governors from central banks across Europe weighed in on the rate outlook.
The war in the Middle East has made the outlook significantly more uncertain, creating upside risks for inflation.
Sadly, the outbreak of the conflict in the Middle East and the impact that's had on energy prices. And of course, we're now facing a very volatile situation.
Bundesbank President Joachim Nagel has said the ECB will need to consider a rate hike as soon as next month. Speaking to Bloomberg, Nagel said a deteriorating inflation outlook could require a more restrictive stance, drawing a parallel with the ECB's experience when energy prices spiked after Russia's full-scale invasion of Ukraine in 2022. Traders are pricing in an over 50% chance that rates move higher in April, according to LSEG data, with 3 hikes now fully priced in between now and the end of the year. Well, let's speak to a man who's been there, done it, got the T-shirt, Jean-Claude Trichet, former president of the ECB and former governor of the Bank of France. Jean-Claude, always a pleasure speaking to you, sir. Look, the truth is, traders, economists, even central bankers just don't know how long this war is going to last, and as such are limited in what policy action they can do next, aren't they, sir?
Yes, indeed. Uncertainty is really the rule of the present game, and it's been illustrated in particular in the analysis of the ECB with this various scenario where you have not only updating to the most recent, I would say, baseline scenario for the present level of price of oil and gas, but the adverse and severe scenario, taking into account the incredible uncertainty which is characterizing the present period of time. And we are already almost at the end of the first 3 weeks, with the probability that it would continue for a long period of time in the most severe scenario. So situation is really very grave, not only at the level of the battlefield, but I have to say at the global level, obviously.
Jean-Claude, it's great to have you back on board, and I want to get to what the ECB should be doing at this point, because we saw the fresh staff forecast yesterday rolling across the tape that we could have inflation now at 2.6%, so from the 1.9% scenario to 2.6%, but possibly even worse depending on the scenarios, up to 4.4%. The market is talking about a swift move, whether even an April rate hike is on the cards. Do you think speed is of the essence now to see some sort of rate hike in the equation?
We will see exactly what is going on. First of all, only in the case the war continues and goes on and there are signs that maybe the President of the United States wouldn't like too much for the war to continue and to go on eternally. But that being said, I think they were very wise in saying we don't give any particular indication now. We will decide on a meeting by meeting basis, and we will take into account the full, I would say, extension of the situation. Of course, you have the inflation on the one hand. On the other hand, you have the downward effect on the growth, which is playing in the other direction, if I may. So it's the regular, I would say, consequences of such a shock. It seems to me that in the past, central banks in the US, in Europe, on both sides of the Atlantic, in the UK also, have demonstrated that they were serious when they say that they have a goal, which is the famous 2% in the medium term for inflation. And I expect that depending on the combination of factors that I just mentioned, they will do what is necessary to deliver this, I would say, appropriate goal. And they did that very, very well in the occasion of the quite dramatic shock that was consecutive to the, I would say, repricing of growth after COVID and, of course, the war in Ukraine. So they demonstrated the capacity to, I would say, maintaining the handling of the situation. And in the ECB in particular, it was mentioned by Christine that we were in a situation as a start from now on where we were reasonably stable, even if the job is never totally finished, but reasonably stable as regards inflation.
Mr. Trichet, you have the benefit of experience and hindsight, having been at the helm of the ECB during the Iraq War. And I just wonder if, looking back on that time now, is there anything that you could advise the current governors to do that you perhaps wish you had done or think you may have done differently, whether that's around speed of changes or the messaging that's coming out? What would you suggest to them based on your experience?
Well, first of all, as you know, the experience of the ECB is not at all the experience of a central bank which would be responsible for a full-fledged federation or a full-fledged centralized state like the UK or the US. I had to take into account permanently myself of the, I would say, variety of public opinions that existed in Europe. And what was the main goal was to maintain credibility in order for expectations to continue to be solidly anchored, even in very difficult circumstances. But of course, my own experience is a long time ago, if I may, and the credibility of the ECB, the credibility of the euro is now very well established, I have to say. And that makes a slight difference between myself and my own experience and the present governing council of the ECB. But my own understanding is that in such uncertain time, it's very wise to decide on a meeting by meeting basis in order to be able to take into account all what happens in all directions, including inflation on the one hand, including the, I would say, possible impact on growth on the other hand, and on growth and jobs on the other hand. So again, I don't want to embark into the game of anticipating what will happen. Yeah.
Jean-Claude, I'm seeing a lot of notes now on the back of what the ECB said yesterday and what others said yesterday and what we're hearing from other guests, that this is stagflation. This is what stagflation potentially looks like as well. A, would you agree with that? And B, what's the toolbox looking like to deal with stagflation? Limited, I would guess.
I don't. First of all, I would echo what Jay Powell said, if I'm not misled, namely that he will not and I will not characterize the present situation as stagflation. Stagflation, we experience it in the first and the second oil shock. So 73 last century. It was a totally different situation. A situation where we had obviously a very high level of inflation. We had the negative impact on growth, of course, of the oil shock, but it was gigantic, a gigantic oil shock, nothing to do with the present oil shock. And of course, there was also the benign neglect of the central banks at the time, which played a very negative role. So we are not a situation which I will compare. Of course, nevertheless, there is a negative impact on inflation and a negative impact on growth, and both have to be judged. It doesn't seem to be a dramatic impact on growth, but we have to check. And I think it was very wise to analyze, both in the US and in Europe and in the UK, a large set of scenarios that would characterize the present situation.
Right.
But again,
right.
Decision meeting by meeting is of the essence, in my opinion.
Well, we certainly have that, don't we? A dynamic approach from the central bank at this point. What was interesting, too, from the Bank of England to the ECB yesterday was the amount of pondering by central bankers about whether we could have another round of wage price spikes. The spiral where you have the expectations reset, really, where people say, look, inflation's going up. I'm going to go back to my employer and say I want a pay hike from here. And then obviously wages start to go up and you see the second round effects. Is that a reality this time, or is it very different to 2022 as we came out of those COVID pandemic trends?
No, I think it's taking into account the uncertainty and the possibility of the war being very durable. I think it's a possibility, of course. And again, I go back to what I said. What is absolutely of the essence is that the credibility of the central banks and their decisions when time comes is such that we continue to anchor solidly the anticipation. The job that has been done is wonderful in the UK, in Europe, in the ECB, and in the US, and in other central banks, in other countries. I mean, the resetting of appropriate expectations, more or less in line with the 2% over the medium-long term, has been remarkable. It's a precious asset, should not be lost in the circumstances.
Jean-Claude, always a pleasure. Thank you very much indeed for giving us once again the benefit of your experiences, and we will speak to you again on another occasion. Jean-Claude Trichet, the former president of the ECB and former governor, of course, of the Bank of France. Thank you, sir. Unilever has confirmed a report that it's in talks to combine its food business with US spice maker McCormick. The British conglomerate said it had received an inbound offer from the American consumer giant, but there is no certainty an agreement will be reached. The Wall Street Journal, even earlier this week, reported that an all-stock deal could come within weeks. A possible agreement could bring together brands including Hellmann's mayonnaise and something I've never heard of, Cholula hot sauce. Got to ask the team, Cholula hot sauce?
Not when I've ordered.
Could we not do better than Cholula hot sauce producers? Is that the most famous one they've got?
Cholula. I'm just looking it up.
I don't even know if I'm pronouncing it. Cholula? Is it like French? Cholula?
Clearly someone orders it in the news.
Cholula? Do I not pronounce it? I don't know what that screen there.
That was the person that orders the sauce.
That was our guest on this one. Thanks, Adam. You wouldn't believe the director's been doing this 20 years, would you?
Maybe they popped out for some Cholula hot sauce, maybe. You never know. It had real craving.
So this is the point that we were discussing the other day about how the business gets reshaped and what should be spun off. And the reality we've seen that the sector has been very difficult for a number of years, that the premium and the interest that you think would be returning to a sector like that, given all the uncertainty. I mean, don't forget these are the bond proxy portfolio as we think about food companies right now. But it's been very challenging to get organic revenue growth up. And what you've seen, again, all these trends that have been very disruptive, all the new brands that have entered the sphere, very, very difficult backdrop. So now you've got lots of consolidation. Is this just the first deal, I would argue? Is it just the first flush here where you've got some interest coming through? Could there be more for Unilever?
I think we've got to move on, haven't we?
You don't want to talk about hot sauce? You're just putting that on the side.
I'm actually better at hot sauces now and mustards than I used to be. I think it's something about your taste buds change as you get older.
Oh, really? Because I can't do hot sauces and chilies and things.
No,
don't pretend you're young and that's why you can't.
when I get to
you're only young
to stage
compared to me, okay? Right? It's all about a relative game. You're not young. You're just younger than me, like most people.
I'm not sure spicy sauce has got to do with age.
No, it has. No, it has. Oh, 100%. Genuinely, this is... okay, well, let's do this. Right, bend the markets. As you get older, you lose your sense of taste a little bit. So that's why as you get older, you prefer stronger cheeses, you can take mustard better, you can take horseradish better. So your taste buds, all these amazing buds in your mouth, that changes as you get older.
But
so
that's
you
not
can...
great for your digestive system, which also then weakens.
I don't know. That I haven't done any work on.
This is like one of our off-camera conversations.
When I joined school, I didn't think we were having a discussion about Steve's digestive system and hot sauce.
School, I didn't know you'd be doing your social life on the show every day. I just had another notification on LinkedIn about your social life.
Oh, excellent. It's getting through then. As long as you're getting the important updates.
Oh, should we get to the market action?
I think so.
Maybe I should have just moved on earlier. What we're seeing on the markets, yes, big risk-off moves we saw in the European markets, but on the back of what we saw in Europe, actually US markets much more contained. So we had ranges to the downside 2 to 3% during that session, but you can see stateside actually down modest territory in the red by the finish, 4/10 off the likes of the Dow. Over the week, down 1.2%, so backing off the record highs to the tune of about 9% now. To the downside, McDonald's yesterday, as we talk about dietary habits, the Tesla moved to the downside on the NASDAQ as well. That was one of the weaker trades. For the NASDAQ now, similar territory to the Dow, about 8% off the record highs. So you've certainly seen rotation away from some areas of the market. Energy, no surprise, the best performer so far for the trading week. To the Asian markets, we are ex-Japan today as you take a look at the trading pattern there. So the Hong Kong market is weaker, Shanghai stocks as well, red materializing around those Chinese names. Yesterday we saw the calls be much stronger and marked higher in a big recovery trade, so about 30% slimmer territory for the Friday session, but still positive along with the Nifty 50. And to European futures, and I mentioned just how brutal the selling was yesterday. Big day of central banking from the Bank of England to the ECB, and the message that came through was very hawkish from a lot of those central bankers. We saw banking stocks selling off aggressively, property stocks as well. This morning, we do look like we'll be seeking some firmer territory, about 1/3% on the Stocks 50 futures. But again, on the back of such a large sell-off, it is very small green territory we're watching this morning on these charts, Ben.
Still to come on the show, President Trump hosts Japan's Prime Minister at the White House as he hits out at the lack of NATO support for the war in Iran. Plus, a meeting of European leaders is overshadowed by key veto from Hungary. We'll have all the details and be live from Brussels. And we'll be talking all things tech with Wedbush Securities' Dan Ives. Don't miss that conversation. That's at 8:45 London time.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts. President Trump praised Japan's support in the Iran conflict as he welcomed the country's Prime Minister Sanae Takaichi to the White House. Trump said Japan was, quote, stepping up to the plate unlike NATO. What does he mean by that? Does he mean they're sending minesweepers unlike NATO? I'm not so sure. Anyway, it comes after Trump previously complained about Japan's lack of support in helping to reopen the Strait of Hormuz. Lisa Kim filed this report.
The summit between the two leaders started off on a good note. The two greeted each other with a hug, but one awkward moment stole the show when President Trump jokingly compared U.S.-Israel attacks on Iran to Japan's attack on Pearl Harbor. Of course, Japan's attack on the U.S. naval base stationed in 1941 pulled the U.S. into World War II. So upon hearing that comment, Prime Minister Takaichi seemed uncomfortable. She shifted in her chair and even looked at her aide and checked her watch. But President Trump praised Prime Minister Takaichi and Japan's support over the war, but also said Japan has to do more given its dependence on the Middle East for oil and given the U.S. has troops stationed in Japan. Trump previously name-checked Japan after requesting that it send ships to open the Strait of Hormuz. Prime Minister Sanae Takaichi reportedly repeated her stance to Trump that there are things that she can and cannot do. Japan's pacifist constitution largely forbids Japan from being involved in active conflict. Takaichi has said that a ceasefire is a prerequisite for her to dispatch Japan's self-defense forces to the Middle East. Trump's warship request has put Japan in a tough spot. That's because Japan increasingly sees China as a security threat and faces regional volatility from North Korea and also Russia. So it sees a greater need to cooperate with the U.S. for national defense. For CNBC Business News, I'm Lisa Kim.
I don't have a lot to say here apart from how Japan is stepping up in a way that NATO isn't. I would very much like to know. That excellent report there just mentioned something that we all know about. It doesn't need a lot of explanation, and that is Japan has a pacifist constitution, which would make it very difficult to send warships to the Gulf. So if Japan is stepping up and NATO isn't, according to those comments from the president, and I have to take him at his word, I would like to know in what way. The other thing is, and I've got to go there, I cannot believe that any statesman, Japanese or American, has brought up Pearl Harbor. Pearl Harbor is stunningly emotive still, certainly on the eastern side of the Pacific. It was the moment, of course, in December 41, I believe, that the US decided to enter World War II. And the fact that the president feels that that is worthy of an off-the-cuff quip, I find that very difficult to understand how he thought that was okay.
The Japanese position to me has been fascinating in the sense that they've been so aggressive when it comes to leaning against China. And we'd seen comments that had really put the Chinese offside in recent months, that if there'd been any moves on Taiwan, that effectively the Japanese might have to do something about it. But then the most important conflict we've really seen has been in the Middle East. And the message from the Japanese was somewhat cautious about putting those warships in the Strait of Hormuz. So you do as a natural stretch. If you can't put a warship in the Strait of Hormuz, how involved could you be if there was a situation with Taiwan, given the pacifist constitution? So again, incredibly confusing. But don't forget, there are links here because Trump is trying to get to a position where he has a meeting with Xi at some stage. We know that's been postponed, but he wants to send a very strong message to lean back against any further aggression towards Taiwan. So it's a very complex picture. I think the Japanese have a role to play here. When it comes to the Middle East role, though, you've got to ask, is it going to be similar to the European position? You can have a warship, but again, not in the middle of a conflict.
And I think the interesting thing is this repeated criticism of NATO, and it gives a real insight into how President Trump views that alliance. It was set up as a defensive alliance, not one to go and join in conflicts that have been proactively begun by one member. And that is the situation here. So much so that even President Trump's own head of counter-terrorism stepped down earlier this week, saying that Iran posed no imminent threat. And yet the precedent this would set, if NATO members heeded that call and joined in, is that any NATO member could choose to begin a conflict and then the others would be expected to go. That's not a defensive alliance. That's something very, very different.